Financial markets have had a hard time since the beginning of the year. The share price of many stocks has fallen sharply, in some cases even to the point of collapse. For investors with a focus on the long term, there are certainly opportunities to discover. And in this video, you will learn how to use ChartMill to find financially sound, growth, value or dividend stocks using the predefined ChartMill Fundamental ratings. And then using the technical screening capabilities to focus on stocks whose price currently coincides with a key technical price level, either support or resistance levels. The beauty of it is that we start from a fundamental perspective by first filtering on the basis of specific fundamental criteria. And within that selection, we then look specifically for price technical characteristics. In this way, we combine fundamental with technical analysis. And it is precisely in this combination that the ChartMill stock screener excels. And that is what I am going to show you today in this video. If you have any questions or comments, please drop them in the comments below. My name is Christoph. Welcome to ChartMill. So first let's start with some basic general filters. These will remain the same for all subsequent screens that will be shown in this video, whether we focus on growth, valuation or dividend policy. To do this, go to the stock screener page and under the general menu we specify a minimum price and minimum volume. And I set the minimum price at $5, the minimum volume at 200,000 shares. What does this mean exactly? Well, with these two basic filters we exclude all stocks that quote lower than $5 or €5 or have a daily trading volume less than 200,000. We do so to filter out underpriced stocks or stocks with too little volume. Such stocks are more likely to be less liquid while volatility just gets higher. And finally, under the type item, we specify that we want to keep only common stocks, ADRs and REITs. This excludes all ETFs. Don't know what ADRs or REITs means? You can read all about it in this post on our blog, and I will put a direct link in the description below this video. Let's jump right in by making a selection of growth stocks. This can be done in several different ways using ChartMill, and in the video link which is appearing right now, I'm going to go into more detail about which fundamental ratios you can use in order to come to a first basic selection. In this video, however, we're going to be a little less specific so that the basic selection gives slightly more results. And I will therefore use the ChartMill Fundamental rating filters, which can be found under the Fundamental menu in the stock screener. I set the ChartMill Health rating to 5. This rating is based on a number of fundamental ratios that measure the financial health of the company. And these are the current and quick ratio and the debt to equity ratio. The current ratio is used to measure the liquidity of a company. In other words, does the company have enough money to meet all payment obligations in the short term, within 1 year? The inventories are also taken into account. And if the answer is positive, then the company is liquid. The quick ratio measures exactly the same as the current ratio, but does not take into account the inventories. And this ratio is therefore more suitable when the inventory cannot immediately be sold as a finished product. The debt to equity shows the ratio of equity to borrowed capital and thus indicates the extent to which the company itself finances all of its assets. Finally, the Altman Z-score is also taken into account. This is a score that indicates to what extent the company is creditworthy and what the chances are of bankruptcy. And specifically for the selection of growth stocks, I then set the ChartMill growth rating at 7. The growth score is based on 3 specific ratios. The EPS growth, earnings per share, to find out the extent to which a company's profitability is increasing. The revenue growth, which is quite obvious. And then the earnings estimates. These are predictions by analysts about a company's future growth and earnings. With these filters, we end up with less than 500 stocks worldwide. And if you only want to focus on the US market, you can do so very easily by selecting the option US only under the General tab. A quick tip for those who only want to screen European stocks, for example: if the number of candidates is too low, you can try to lower the required minimum volume and thus obtain a larger selection. So far we have thus retained an initial broad selection of growth stocks worldwide. The next step is to find the shares that coincide with interesting technical price levels. But first we are going to configure the chart via the main chart section. Remove any overlays and indicators and then click on the plus sign. In the overlay field, click on the letter C several times until you find consolidated support and resistance. Then click on Add Indicator. Now every chart will show immediately the relevant support and resistance zones as identified by ChartMill. Set the time frame to weekly, and if you prefer bars instead of candlesticks, you can change that under type. For the weekly chart, I often use the option Best Fit 2 under the menu Period. You will now see the weekly charts of all the stocks which have been retained so far, with the main support and resistance zones automatically drawn by ChartMill. Red is resistance, green is support. Based on these zones, we can now apply specific filters which will measure how far or how close the current price is located to these zones. To do so, select the support and resistance section. And since I work with weekly charts, I'm using the filter Weekly Horizontal Support 1, WHS1. And I start with the condition that the stock must be quoting at less than 5% of the nearest support level, identified by ChartMill. Next, take a look at the results one by one. As you can see, ChartMill does a pretty good job in filtering out the growth stocks whose price is close to a significant support level. If the number of candidates is too low, you can opt to set the filter a bit less strict and choose 8 or even 10%, for example. If you scroll further down, you can also filter on the basis of the length of the support level. For example, if I choose WHS1 length bigger than 50, ChartMill will exclude all shares of which the support level exists for less than 50 periods. In this case, it corresponds to 50 weeks, since we are working with a weekly time frame. And even the strength of the support level can be determined. If, for example, you want to know which shares have already tested their support at least twice, just select WHS strength bigger than 2. You can use the same method to find stocks which are close to the nearest resistance level. Use the selection field Weekly Horizontal Resistance. I choose current 5% from WHR1 and WHR length bigger than 50. In this way, you'll be able to find nice breakout setups. Let's proceed in the same way, but we'll now focus on value stocks rather than growth. A more detailed way to search for value stocks is available in the video whose link now appears at the top right corner of your screen. First, remove all non-basic filters or open a new tab and start over with the Fundamental tab. The ChartMill Health rating is again set to 5. Next, we use the ChartMill Valuation rating option and set it to 7. The valuation rating takes into account the following ratios. Price earnings, this gives an idea of the price investors are now paying for each dollar or euro of profit the company realizes. It is a quick way to determine whether a stock is cheap or expensive. The forward price earnings to assess how a company is expected to perform in the future and what its estimated growth rate will be, and the PEG ratio to reflect the valuation of a company taking into account its expected future performance. According to the PEG ratio, a company with strong growth rates year after year may have a higher P/A ratio. Again, choose the support and resistance section and set the filters as desired. As an example, I set the following filters. Current 5% from the weekly horizontal support and the WHS1 length bigger than 50. These are the same technical price filters but applied to stocks that exhibit more typical characteristics of value stocks. Finally, you can do the same if you are looking for stocks that pay a decent dividend. Again, there is a video available that explains more about how to do this with specific filters in the stock screener and what to look for in particular. Here we are once again using the predefined ChartMill ratings, so I select the following filters. The ChartMill Health rating at 5 and the ChartMill Dividend rating minimum 7. The dividend score is based on the following ratios. The dividend yield, which is a ratio that represents the relationship between the stock price and the annual amount paid in dividends, and the dividend yield is always expressed in percentages. Dividend growth, it indicates the extent to which the dividend is growing, and stable growth of the dividend is at least as important as the yield. Based on this selection, you can start fine-tuning again with the help of the support and resistance settings. When you notice that the number of candidates with the weekly horizontal resistance settings is too low, you can also use the daily horizontal resistance settings. For instance, in this case, I'll choose the option current 5% from horizontal support. But of course you can equally look for breakout setups with the horizontal resistance option, and I set this to current 3% from horizontal resistance. To conclude, a few general observations to keep in mind. Remember that the fundamental ratios mainly serve to compare companies within the same sector or industry. Just comparing ratios between companies that are part of completely different industries is like comparing apples to lemons. So when examining the final results, it is best to do so per industry or sector. Please note that these ratios do not in any way replace an in-depth analysis of the company itself, based on the income statement, the balance sheet and the cash flow. They are, however, very useful starting from a large group of shares to obtain a first basic selection. Pay attention to the management of the companies in question. A simple search on the internet can provide a lot of interesting information about their track record and work experience in other fields or other companies. And when analyzing the results, always take into account the general economic situation and the prevailing market sentiment. In times of euphoria, it is easy to be positive about stocks. The real challenge is recognizing quality companies when the economy is less buoyant and stock prices sometimes plummet. Alright, this brings us to the end of this video. Make sure you don't forget to like the video if you found it helpful. It will definitely help us to grow this channel. And feel free to experiment with all the possibilities ChartMill has to offer. I hope to see you soon in the next video.